Good evening, everyone, and thank you for joining us this evening. On behalf of the Treasure Coast, Florida chapter of the Links Incorporated, I say welcome this evening. Welcome to part 2 of our Smart Money Moves series. If you were with us last month, we hosted an amazing webinar entitled Budgeting During a Crisis. And if you are here with us for the first time this evening, we say thank you. Sit down, relax, enjoy the ride, because you are about to embark on some important information that will positively impact your life. So for this evening, we have some housekeeping items that I want to go over. Number one, I ask that everyone stay on mute. Number two, the best way to experience this webinar this evening is to watch it on Speaker View. So please take this moment and just go to Speaker View on your device so that you can get the full effect. Our organization is all about identifying ways to make our community better. And as a result of it, what we have done is launched a number of webinars to help our community. Last month, as I said, budgeting during a crisis was the start of it. And today we are tackling taking control of your credit. We decided that this would be a great tool, an asset to provide to our community. We have with us this evening our presenter. Many of you may be familiar with him. He has a wealth of knowledge. He comes to us with great experience, and we wanted to share this knowledge with you. So before I bring him in, I would like to introduce Gene Broom. Gene Broom, our presenter, is the president, CEO of Credit Confidant. He has well over 20 years in credit, educating, coaching, advising, and when needed, credit restoration success. Further, he is the president, general manager of America's Financial Future Foundation Incorporated, a 501c3 registered nonprofit that provides assistance to low to moderate income families, as well as a focus for serving the educational needs of military veterans and their family. Gene wrote Insider Reveals: Secrets to Improve Your Credit Score, a book that is a guide and valuable resource to educate and guide consumers for the journey to obtaining the credit scores that they want and deserve. Now, if you don't have something to write down this information, take this time right now to grab a pen, grab a pad, so you can jot down this valuable information that Mr. Broom will share with us this evening. And without any further ado, I welcome Mr. Gene Broom.
Thank you so very, very much for allowing me to be here with you this evening. It's an honor to be with an organization like the Links International with your Treasure Coast chapter, reading about it and finding that your history goes back to 1946 is amazing in and of itself. But also that you've got 16,000 professional members, and that just totally blows my mind to be surrounded by people of your caliber. So thank you very much for being here, for giving me your valuable time, and for allowing me to present information that I know will have an effect, and it will have the ability to empower people to regain control of their credit, which they deserve. The title that you picked, Discovering the Treasure of Home Ownership, Take Control of Your Credit, really sums it up extremely well. And what I always tell people is that it gives you the ability in that empowerment to live the life that you deserve instead of the life that you're maybe living now, or people that are living and they're getting something less than the very best. Life is a precious commodity. We see the news, we see of so much sadness, so many people that have lost loved ones, but so many people also that are really hurting financially right now with so much going on and so many businesses affected. We're just seeing from our business end of it so many more people than ever before that are coming to us for assistance and education and guidance for their credit, because when you're not working and the income is interrupted, then obviously bills are not getting paid. And even though there's supposed to be some sort of mechanism that the government put in place to allow people not to have the negative impacts on their credit during this time, they are still creeping through. And people are much more savvy now. They're staying in touch with news, they're learning more about what they need to have in place to be able to enjoy that fulfillment of the dream of homeownership. So many are being very proactive, and they're looking for being ready whenever we do return to the state of normalcy, they call it. I'm not sure that I know what normalcy will ever be for us again, but the lenders have tightened up even further their requirements. And so being ahead of the curve is so, so very important. And what the intent of tonight's presentation is to give you an overview of not only how credit works and how it affects and impacts your life, but also some tips and tricks of some things that I'll tell you that are within some of the changes that have occurred in the last 22 to 24 months from the credit scoring mechanisms themselves that have allowed people to enjoy better credit scores, because there was a time that paying your bills on time just was all you needed. If you paid them on time, had a great history, you had a great score, life was good. And that's just no longer the case with the way that the changes have been made from the analytics that they have done. And they have found where other things that people do in their day to day usage of credit has an impact on the credit score that is in conjunction with, not opposed to by any means, paying on time. So what I'm going to do first is I'm going to, let's see if I can get this thing to work here. Just, some basic questions that I typically ask people. How many of you have checked your credit in the last year? And I'm always amazed at how many people have not. Some have not checked their credit in several years. And this is a very important aspect, and you need to make sure that you're checking your credit at least monthly, preferably weekly, simply because identity theft has really gone rampant and is happening, every 2 seconds.
Who was the president? It was Tracy.
Is the current statistic. So, with that in mind, you've got to stay in touch and in tune with your credit file to see what's going on and what can you do. What do you need to do? Let's see here. Um, Remember that any online credit score mechanism that you utilize, whether it's Credit Karma, Credit Sesame, Experian.com, FICO.com, any of them, just remember that none of the online scores that you can, access, whether free or with pay, none of them are accurate in that they will match up with what the banks see and what the banks are using to make their decisions. There are three main bureaus. We call them credit repositories. They just report information. They gather it from all of the various sources available to them. And people always ask, why do the scores vary between the bureaus? You got you got Experian, Equifax, TransUnion. And the reasons that there will be a variance between them is because all of the creditors, all of the collectors, all of the providers, they don't report to all three bureaus because it costs money for them to report to the bureaus and to be a member and to give and receive bureau reports. And so consequently, you may have one that reports to only one, maybe two, or all three. It's important to your future so that your scores can be pretty much in line, that you deal with creditors that report to all three so that your scores can be very similar. How do you know? Ask the lender before you ever apply. Who do you report to? If they say they report to all three bureaus, then you can move to step 2 and make the application. If they say they only report to one, then that's not necessarily where you want to do business because your scores will get very lopsided. All of the banks, all of the credit unions, all of the mortgage brokerages, they report to all three. Most of your main credit cards report to all three, but many of the credit cards report to one or two. And most collectors from any of the collection agencies, when accounts go into collections, they typically only report to one bureau. Therefore, that particular bureau, with the score that goes with it and its contents, will be way out of whack from the other two. What can it mean? If you go to a lender that retrieves their information and gets their credit scoring from that particular one where all of your negatives or most of your negatives are reporting, then you may be denied the loan simply because they don't see that the majority of everything you do and have done is very positive, reporting to all three. The negatives in the one can draw the score way down and cause you to be turned down for whatever that loan may be. Typically, that'll be on the consumer end, like an auto loan, boat loan, something of that nature. But when you're dealing with home ownership, they use the middle score of the three. And if you have more than one borrower on the loan, then they use the lowest of the two borrowers or three borrowers. And before I retired from doing home mortgage lending, the most I ever had on one loan was 5 people, which I promise you was a nightmare for gathering documentation and verification of everything, but that's a different story. But what they use for determining the interest rate was the lowest of the 5 credit scores. So it's very important that if you're going to join with someone else on a loan, that you join with somebody that has equal or better credit than you. Otherwise, you may be penalized in interest rate, which translates to a lot of potential lost money in wasted interest fees. So just remember, the variance between the three is predominantly, not only, but predominantly because of the fact that creditors and collectors don't all report to all three. So you'll have 3 different scores, and I've seen the difference be as much as over 100 points between the lowest and the highest. The goal is to get to the best, because the best equals the best interest rate, which means more of your hard-earned money gets to stay where it needs to be, which is at home. Lenders verify income. This is after the credit has been met. Until the credit score, whatever the minimum is for that particular lender, until that credit score is met, if it's a 640 credit score requirement, 639 is a denial. 1 point makes a difference. And the average person can be taught to gain 20 points within 1 month without doing anything but just changing their strategy, changing their behavior. And I teach people how to do that so that they can grab those scores. Because one of the things I found out in doing mortgages was that most of the turn downs for mortgages needed 15 points or less. So it's a very thin margin that's affecting the average person from that dream becoming reality. So once credit is met, then they verify income. They look at debt to income ratios. They look at your assets, how much money you have liquid in on deposit to actually qualify for the purchase. So then I always instruct people when they're about ready, credit is just about ready to go. They're ready to start shopping for that home, start getting that dream really on fire. That's when I tell them, okay, start getting your docs ready, get your tax returns ready, get your pay stubs ready, get your bank statements ready, etc. So that when they go to their chosen lender, then they're ready to get going and get their pre-approval ready to go to the chosen realtor and start shopping for that home. That's when the dream really starts to get on fire. But just remember, it all begins with the condition of the credit. There was a time that we used to say, because I'm old and I remember the time, that cash is king. Those days are long gone. Credit is king. It controls our very life. You can't run a car without a credit card. You can't book a vacation without a credit card. You can't do virtually anything without a credit card. So you've got to work on the credit in order to be able to have those tools available for you. Because I mentioned identity theft, I put this in here just as a little funny joke because identity theft is so real. And I am a past victim of identity theft about 14 years ago. And I promise you, it is a terrible, terrible nightmare to get out of. For me, it was about a 2-year episode. And I put this one in here because I saw it on Facebook one time. It says if you've got a 350 credit score, that is a prevention for identity theft. Because if you got a 350 credit score, nobody wants your identity. They can't do anything with it, and have at it, no problem. How does credit affect us in our daily life? When we're not looking to borrow anything, we don't want anything on credit, we're not looking for anything to buy on credit. Remember, you're much more than just that 3-digit score. So you need to realize that that 3-digit credit score is controlling you. So how's it controlling you? Just a few, they check your credit when you go to rent a house or rent an apartment or a condominium. They pull credit. It can be the kiss of death, meaning you're turned down altogether, or it can mean that your security deposit goes sky high. I've seen security deposits simply because of credit. I've seen a normal security deposit that is $1,500 to $2,000 be over $7,000. And it's because they pull the credit and they feel that you are a higher risk, and therefore they are going to minimize the risk. And what I always secretly feel, and I have nothing to base it on or prove, but I think it's really a means of making you go away, because the average person that's renting doesn't have first and last and a security deposit of $7,000. So they go away and they start looking for another place to maybe rent. Turning on your utilities, the security deposits that they require for doing that, if your credit is good, there's no security deposit. If your credit is moderate, it may be just a moderate security deposit. And if your credit is weak or really poor, then you're going to pay the maximum amount for turning on the utilities, electricity, water, cable, etc. Automobile insurance premiums are now determined 80% by your credit score and only 20% by your driving record. And this is a change of a few years ago. And the national average, when I checked it 3 months ago, the national average differential between a person with a 700 credit score versus a person with a 600 credit score, the difference in automobile insurance premiums nationwide varied as much as 60% higher premium. That's a lot of wasted money. That, again, is money that should stay at home. When this first became an issue, I checked with insurance agents in the more localized area, Indian River, where I live, St. Lucie, and Martin County, where I do a lot of business and I do a lot of presentations. And what I found between them was that it was an average of about 42%. Still high, but not 60%, but still high. So you want to have that credit score in the best place simply for your day-to-day activities. More than 85% of the companies now, and it was just 70% a couple of years ago, but now, it's approaching 100% of the companies that are doing credit checks as part of the application process for a job. It previously was a situation where it was a job where there was any kind of a security clearance that was required, anything that had to do with sensitive information, people's personal information, birth dates, social security numbers, addresses, and things of that nature. But now it's just gotten to be where it's just part of the everyday job market. Why does it matter? Statistically, what they found is that people that have the weaker credit scores, from studies that have been done in some of the universities that I've read, have found that people with the weaker credit scores actually have a much poorer work performance, productivity, and reliability for coming to work on time or coming to work at all. And I would have never thought that that really had that kind of an impact, but these studies have done a great deal of really digging in to find out the effects of poor credit on two major factors in life. One has to do with your health, and the other has to do with your job productivity and performance. Health end of it, obviously, people under that kind of stress with bill collectors calling every day, hating to go to the mailbox because of all of the notices from bill collectors and such. The stress level causes blood pressure problems, heart problems, anxiety, and the list goes on, therefore higher healthcare cost. And then from the standpoint of the work in the workplace, then they found that people had the absenteeism. They had the what they call presenteeism, which means the person was there, but their mind wasn't on their job. Their mind was elsewhere because they were being bombarded at night when they got home after a hard day's work, only to be called and bombarded with bill collectors calling. No one needs to live like that. No one deserves to live like that. And there are ways to be able to avoid it. There are things that you can do to minimize the ability for collectors to call you, to do any of that type of thing. And we discuss that because what I look forward to doing is helping people get on back on track, have helping them to enjoy the life that they deserve instead of dreading coming home. And if they have a significant other at home who has either gotten home earlier or is a stay at home person, those people have gotten the calls all day. Therefore, when they come home, then they're going to get bombarded with all of those complaints about this one and that one that called. So they found a lot of things about the job world. And this latest one really, when it came out, blew my mind until I read the statistics and the reasoning behind it. Before anybody can take the oath to join the military, any of the branches, and you can look it up on the internet and you can see what the restrictions are for each of the branches of the military, but they've really tightened it up strong, almost the same type of restrictions that are in place for buying a home. The militaries require a credit check, and a weak or poor credit file and credit score can cause the person to be denied entry into the military altogether or put them into a position in the military that may be less desirable than what they intended when they joined the military. The long story short is credit affects us all, even when we're not borrowing, because so many people never think about their credit until they want to use it. And I always say to people, people don't know what they don't know until they need to know it when it comes to credit, and that's too late. That's why checking your credit on a very regular basis is so important. Know what's going on. Look for things that are not being reported correctly. Look for things that maybe you don't recognize. Maybe identity theft has already crept in. In 2017, we all heard about, read about, knew about the the breach of the files at Equifax, which impacted 149.5 million people. And we did checks for the next year for people to see if they were on the list. And you can go to the Equifax site and you can check to see if you're on the list. And I've yet to find anybody that's not on the list, including me. And so the breach was real, and there is no telling when it may rear its ugly head, because it doesn't have to, you can't say, well, it hasn't happened to me, so I must be safe. It doesn't have to happen now. They can use this information that they've got on you 5 years from now, 10 years from now. So, what can you do? Monitor your credit, stay on top of it, and make sure that what's being reported is true and accurate and yours. Now, how does credit scoring work in today's world with the changes? Right now, most of the lenders are still using the FICO credit scoring, which has a maximum score of potential of 850 points. And there are 5 components. There's also a credit scoring model called Vantage. Some lenders are using Vantage It has different scoring mechanisms built into it, and it has a different score limit or spread, if you will. Instead of 300 to 850 on FICO, it will actually go up to in the 900s under the Vantage. And there are a few more that are gaining some respect. So consequently, credit scoring is important as a question for a potential lender. What credit scoring do you use? If they say they use FICO, then you know what your FICO is because you're monitoring it. If they say they use Vantage, then you know. I found one bank that is actually using, believe it or not, Credit Karma as the score. And Credit Karma typically is off between 40 and 60 points from what the FICO score is when you go to a lender. In my book, I refer to the online credit scoring models as feel good scores because that's the main purpose that they serve. They make you feel good. You thought your score was real bad, you checked your score, it wasn't as bad, and you feel good about that. And then you go to the lender feeling that you qualify because it said that you had a 650 credit score. They require 640 credit score, so you feel good. They pull your credit and you've got a 595. And so you're turned down. So feel good in the morning could be feel bad in the evening. So of the 5 components, the first one, and this pie chart has been around for years, and I admit to you freely, I copied it because it shows it the way that it really still is as far as the component makeup of those 5 for the 850 score. 35% is your payment history. So that equals about 297 and a half points that are potential from the payment history component alone. It's the single largest component. How do you pay? Do you pay on time? Do you pay on time sometimes? Do you pay on time most of the time? Or do you pay on time all of the time? But in the same piece of the pie, this is the place where anything negative that has occurred in your credit file will show up. That's good and it's bad. It's good in that it's only just a little over a third of the total credit score potential. But it's bad because it's lumped in together with the positives that you have. So it can be just a bit skewed when it comes to the credit score for reality. So for negative things that are in this piece of the pie, you could have collections, you could have bankruptcies, tax liens, short sales, foreclosures, repossessions, anything that's in collection, but no matter what type, will go into this piece of the pie. So it's very important that the payment history be maintained the very best possible. The second one is the amounts owed, and it's second only to paying on time. This is 30% of the credit score, which equals a potential of 255 points. And this really is a confusing piece for people. On revolving accounts, credit cards, that type of card where the minimum payment is based upon the balance, there is a magic number, and it is coincidental totally that it happens to be the same as 30%. And that is, and this is the main thing I see when people are missing anywhere from 30 to 100 points, will be where they're violating this one rule, the 30% rule. We call it the penalty limit. When your balance on your credit card goes over 30% of the card's credit limit, then you start losing points. And that happens $1 over 30%. So if you've got a $300 credit limit, 30% is $90. You want to stay at $90 or less, preferably less. The very best will always get you, and it's difficult to get there and stay there, but the very best component makeup for the credit cards will be if your usage percentage of utilization is less than 5%. But 30 is the absolute maximum. Now, where the misconception is when is the score calculated? It's only calculated once a month when it comes to that particular card, and that is the date that the statement drops, meaning the end of the period that that statement covers for that card. Not the date you pay it, not the due date, but the date of the statement. So, a practice that I began several years ago to capture the most points and also to make sure I didn't pay any interest on credit cards was I set my calendar up to tell me on each card 5 days prior to when the statement was going to print so that I could go online or by phone and pay everything and make sure that what I was going to report was well below the 5%. Mine typically runs about 0.5% across the board. So I grabbed the most points that you can grab. But again, it's not about when you pay it. Many people say, well, but I get the bill and I pay it in full. Well, that saves you the interest. But if you were over the 30%, you lost the points. And the only way you'll gain them is the next month if that statement shows that you're down below the 30%. So your scores can actually be very cyclical in going up and down 30 to 35% simply based upon how you're using your credit cards and when you're paying them. And I hope that makes sense to you. The three components on a credit card, two of them are advertised and one of them is not. One of them is you got to pay it on time, which was the 35%. The other is you've got to stay below the 30% penalty limit. That one you can see on the internet. But the third one that you don't see is a component in that category that they came out with about 22 months ago, and that is the third important part called regularity of use. Because now the home lenders that are backed through Fannie Mae and Freddie Mac and Ginnie Mae for all of the FHA and conventional VA and USDA type home loans, they all now are looking at the most recent 24 months of activity on your revolving accounts. So if you are going with, let's say, 5 months, you paid it to zero and you haven't used it, the system doesn't know that you did use it. It knows that when the statement came out, it has a zero balance, therefore you didn't use it. So what I teach people is make sure that you always have a statement that shows up with a $3 to $5 balance on it when the bill comes to you, whether electronically or by mail. And that meets the need for regularity of use. Now, does that mean you have to use it every single month? No, but you're going to have some usage in there. And I see when I do credit analysis for people, I see cards that haven't been used in 2, 3, and 4 years. And a good way to quickly grab some points is to just go out and charge $5, $10. And that shows usage, shows to be well below the 30%, and make sure you pay it so that's paid on time, and that'll grab points. 15% is based upon the length of the credit history. How long have you had your accounts open? It counts for car loans that are paid off. It counts for credit cards that are open. It counts for credit cards that are closed. They count against you because it looks at average aging. The longer you have had the accounts open, that's 127 and a half potential points. And so it is huge in impact of the credit score the longer you've had them. I think on mine, it gives a report and says that my average age of my accounts is like 23.3 years. I don't apply for credit cards anymore, even though they offer great deals that I just can't live without. I choose to live without because I don't want new cards because that's going to decrease the age because they take the total age divided by the number of accounts and that becomes a number and that's the average age. So the newer it is, the more it can count against you. So my advice always is open what you need and open very carefully and be very careful about closing accounts because if you close old accounts or you allow them to be closed simply because you don't use them and they're closed due to inactivity, then what happens is the damage is still done. You've reduced the average age and you lost points, typically 18 to 20 points. So be very careful with that one. 10%, which is 85 points, is new credit. This one's where inquiries come into play. People are always concerned, is this going to be a hard inquiry on my file? And the rule of thumb is real simple. If the application that you're going to complete has a monetary value, meaning if you don't get approved, you've got to pay cash, then it's going to be a hard inquiry. So you want to be very careful about applying for new credit because the algorithm that's used in the credit scoring model itself, that mathematical formula, it has no way of knowing if you were approved or not approved. It just knows that you're applying. And if you're applying for a lot of different types of loans in a short period of time, that's a danger signal. It's a higher risk because it looks like this is a person that is about to get in over their head with too much new credit. And they have, like I said, no way of knowing were you approved, and it doesn't matter. And the last item is the last 10%, the last 85 points, and that's the types of credit in use in your profile. Different types of credit have different value in the weight of the scoring model. Obviously, a home mortgage counts the most because it represents the most difficult and typically the largest single credit item in a person's credit file. And automobile loans and installment loans will follow that, and then it gets into the revolving accounts. Rule of thumb is the more difficult it is to get the card or account, the more it counts. For instance, there is a difference between an American Express account and a Fingerhut account. Fingerhut, they let most anybody have, so therefore it has a much lower value in the weight of the scoring model. Nothing to do with whether Fingerhut is a good company to do business with, not at all. There are good products that they sell, and from everything I hear and see, it's a good company. But if you're trying to build credit and you're trying to strengthen credit, then you want to go for the cards that have the greater value. You're not going to get with weak credit or moderate credit, you're not going to get approved for an American Express, so don't apply. But you can get Visas and MasterCards, which count the most, and you can get them from many different sources. Capital One is the most popular. And if your credit score doesn't allow you to get unsecured, where you don't have to put up a security deposit, then you want to look at research, see what the annual cost is, what the interest fees may be if you ever were to have to make the payment and couldn't pay it in full during the month. Look at what your costs are going to be in that event, check to see if there is a monthly fee, anything of that nature, and then make your selections carefully. I always maintain a list of secured credit cards that are guaranteed approval, simply to help people get off the ground, because now the rules are on credit cards with the changes of 2 years ago. You must have a minimum of 3 active credit cards and a maximum of 7 credit cards that are active and in use with a small balance at least every 3 months. It has to show activity under the 30% and paid on time. And just doing that with 3 credit cards, going from no credit cards and using them for $5 or $10 only per month, so that you're not incurring any debt to gain the credit. That will take the typical person, no matter where they are, in the 400s, in the 600s, in the 700s, and within 6 months of doing it that way, it will pull between 50 and 70 points without any credit repair or credit restoration. So there are a lot of tips and tricks that are available for how to maneuver within the system. Credit scoring is very fluid, ever changing. So your credit scores are never the same each month. They're always going to be changing, simply because these 5 components are always working in conjunction with each other and in opposition to each other to some degree. So you want to make sure you understand how does scoring work. Bottom line, live your dreams and enjoy your life. That's what you should do. This is the path to better health, better wealth. Your financial future is what it's all about. No one should tell you what dreams you get to dream. You're a group that is made up of professional individuals. Nobody told you what your dream could be. Nobody told you what your limitations were. And if they did, you proved them wrong. That's the way you should live your life, because we only have this one life and we need, I believe, to enjoy it to its fullest potential. Simple solutions: check the credit regularly, pay your bills on time. If you're going to be late, let the creditor know you're going to be late. It's much better for you to tell them in advance than it is for them to call you, because they may forgive it and not report it late if you've got an otherwise good history with them. Keep your credit cards balances low. You must have the 3 cards. Protect your identity. Never give out any information on the phone or on the internet. If you don't know who you're talking to, you don't give your information ever. I'll give you the last 4 of my social, and that's the most you're going to get from me ever. When they want more than that, the phone conversation is over. When you get those calls that tell you that you're getting a call from the Social Security Administration because your Social Security number has been used fraudulently and it has been suspended, that is fake. If you get a call from the IRS, that is fake. I promise you, the IRS doesn't call you. They show up. They don't call you. When you get anything that looks suspicious, treat it with that same suspicion and don't open it and don't follow it. All of these giveaways, all these surveys that give you products, all they're doing is data mining to get your information so that they can sell it. Close accounts carefully, always looking. If you've got to close accounts, make sure you're closing the newest ones, not the oldest ones. This next one here is my favorite. Follow your dreams. Nobody has a right to tell you what your dreams can be and should be. You follow your dreams and you can be anything that you want to be and you can have anything that you want. There's nobody listening, nobody that you know that can't have great credit and great credit scores. Nobody is beyond help. It's all about taking where you are, finding out where you want to be, and then mapping out that future. It's about changing lives forever, making lives enjoyable, and making families much happier units. Feel free to take down my number if you'd like and my email address. And I only do that because anybody who would like a no cost credit analysis done, and I encourage everybody over the age of 18 to have it done. It is free. There is no obligation. There is no sales pitch. It's about finding out where you are and getting the tips and the tricks for what you can do to maximize your credit score so that you can achieve whatever that dream may be. Some people want to buy a house. Some people want to buy a new car. Some people just want to feel like humans again. Divorce is the number one cause for poor credit, has been for decades and still is. So I'm here for you anytime. Pick up the phone, call me, and I'll gladly help you. I'm committed to the links. Y'all are a great group. From everything I've read about what you stand for, I'm honored to be here tonight. I thank you for your time. And now, are we going to be able to turn it over for some questions, or you got some questions, or what do you got, ladies?
Thank you, Gene. We do have some questions in the chat, and I want to go through them with you. So the first question asks, what should we be using for those weekly or monthly credit checks?
I typically, maybe because I'm almost 70 years old and I'm cheap, I don't know, but I typically use myself Credit Karma because it's free. It takes 5 minutes to set up and it will show you your accounts. You're not going by the scores, you're going by the file content. So if you have that and you can provide me that, I can do an analysis off of that. It's very easy. Everybody's entitled by federal law to get once a year a free copy of their credit file, and they'll try to sell you the scores, but you don't want to do that. And that's at annualcreditreport.com. But that one is very difficult to read, and you got to ask for all three of them separately. Two will email it, one will mail it, and so that one's not as convenient. But Capital or Credit Karma, Credit Sesame, those are good free sites. Even the one from Discover, that's a good one because you don't
Okay.
have to have a Discover card to get it.
All right. Our next question here says, my credit card company sends me a credit score each month. Is that reliable?
Not at all. Not at all. It's probably inflated and is one of those feel good scores. Is probably inflated between 35 and 50 points, you know, depending upon the credit card company. I see them all over. But yeah, they're inflated. The only place you're going to get a real score that is a real score is going to be from a bank, a credit union, or a mortgage brokerage. That's it. You won't get real anywhere else. Even the paid sites, you won't get it.
Okay, so we have a comment here that says American Express has a credit monitoring service. Any comments about that?
That one, because it's American Express and the most valued card there is, it is probably the closest you're going to get to real. It may be within 10 points.
Okay.
Yep. I found that on my Capital One credit score, I found that it runs within 12 to 15 points.
Okay. Next question. Wouldn't checking my credit report weekly lower my credit score?
Never. You can, and I actually have had people that check their Credit Karma and Credit Sesame daily, which is taking it a little bit to the extreme, but it's okay. But you can check your credit as often as you want because that is called a consumer inquiry, and in consumer inquiries are different than hard inquiries. Hard inquiry is where you are applying for something at a lender where there's a financial, consideration involved. When you're checking your own credit, you can check it, like I said, daily if you've got the time, and it will not show up even in the registry log.
Okay. So this next question has to do with paying late. So the question asks, is 1 day late the same as 25 or 30 days late in terms of impact of credit score?
Now, it depends on what we're calling 1 day late. And here's what I mean by that. Every credit account has a due date, and then it has a statement date. Being 1 day late of the due date, they love for you to do that because then they'll charge you a late fee of anywhere from $25 to $35. But it does not report to the bureaus as a late payment until you hit 1 day past the statement date. And if you are 1 day late of the statement date or 25 days late of the statement date, the penalty is the same. It's between 32 and 35 points. It's a very bad hit. It's a very bad thing. It's a very difficult thing to get off of the credit file. And with changes that the bureaus are planning in credit scoring coming out in early 2021, they're planning to move it up to a 50 to 55 point hit. So it's bad.
Wow, that is bad.
Yes, that's why you want to call them in advance if you see you're going to be late, because if you've got an otherwise good history, a lot of times they'll say, okay, we're not going to report you late, so it won't show up on your file as a 30-day late simply because you had 3 years of never being late and you cared enough and were proper enough to contact them.
Okay. Should we close credit cards that we don't use?
Depends on the age of the cards. My simple answer is no. But I had a guy, one of my clients today, that called me and said I may have done a bad thing. I closed an account with such and such retail because we don't shop there anymore. But they were charging me $6 a month just to maintain the card. And I said to him, how long have you had the card? He said 2 years. And I said, well, your overall profile is much older than 2 years. So closing it is the right thing to do if it's going to be wasting your money. Who's going to pay money to have a card so you can go and spend money at that place? I mean, that's crazy.
Right.
So it's got to be the newer instead of the old accounts because they count so much.
Okay. We have another question here. I have heard that we should not register disputes online with bureaus, just in writing. Is that true?
That is very true, but they want you to do it online because they know that they're not going to really do anything. The CFPB, the Consumer Financial Protection Bureau, oversees the credit bureaus and how they handle incoming disputes. Right now, during the coronavirus, They added an extra 15 days to the bureaus because the bureaus said we're shorthanded and we can't handle all of the disputes coming in. They're getting 25,000 disputes a day. And so the CFPB said, okay, we're going to give you 15 extra days to do the dispute investigation, which was insane because now that added a third to the time. And so the problem is that if you dispute it online, you're not doing the part that is most important, and that is putting it in writing and providing a copy of your driver's license or social security card to prove that you are in fact the consumer doing the disputing. That's what they want you to do because they're going to send you a response that says we have investigated your dispute and we've determined that it is being reported correctly.
Okay. On here that says adding someone as an authorized user can be harmful when, I guess the question is, when can that be harmful? And how long does it take for someone with bad credit to reflect in good standing if added as an authorized user?
Many times I advise people if they want to get a quick boost to their credit score, I advise them to get added as an authorized user to a parent or a relative's good standing card with a low balance on it, with a good credit, limit on it. It's a great thing because it adds a lot to the aging. It changes the aging automatically, typically within 12 to 15 days. The score will jump in 12 to 15 days. They get all of the history of that person's usage of the file and the answer to the part as to when it's bad. And this will be funny, but it isn't funny. And that is when you give that other person the card that they got authorized on. I tell people, Adam, the card comes to you because you're the primary.
Right.
Add them, activate it, shred it. They never have to use it to get the advantage of all of your history and usage. But if they ever get the card, they could go out, and I've seen it happen, where they go out and they charge up and charge up and charge up and really mess up the credit utilization percentage.
Right. Okay. So just going to give everybody just a couple of minutes. If you still have some questions that you would like to type in the chat, we can share with Mr. Broom, please do so now. While we're giving them that time to do that, I have a question. Does banking history have anything to do with credit history?
Currently, no, but that is one of the considerations that they're looking for in 2021. It's part of what's called the Ultra FICO, ULTRA FICO. You can look that up on the internet and you can read a little bit about it. I've written a piece on it that puts it in everyday language so you can understand it. But the Ultra FICO is, in essence, I call it an appeals effort where you get your credit score and you need a few more points. Then you can ask them, do they do the Ultra FICO? And if they are a lender that subscribes to the Ultra FICO, then that goes in and it goes to a third party. They take your bank statements, and they're looking for overdrafts, particularly, and then they will rescore it, and it typically will affect about 18 to 20 more points. And FICO has estimated that the Ultra FICO ability will affect somewhere to the tune of 26.5 million Americans for an average score boost of 20 points. That's coming, and that's real, and that is a good thing. It's one of the few good things that credit scoring has had to happen on its horizon in at least 3 decades.
Okay. So at this time, I don't see any other questions in our chat. However, I do see some wonderful comments that I would like to share with you.
Please.
We had excellent presentation, very informative, informative presentation. Thank you. Mr. Broom, thank you for this webinar. I learned so much. Elizabeth says, I agree, Jean, never give them the card. So she agreed with that, with that statement. Yes, so it looks like our participants learned a lot from your presentation this evening, and we cannot thank you enough for taking the time to share this valuable information with our community.
Please understand that this is a very shortened version of, several different types that I do for different audiences. And so for any of the people that think of questions, call me. That's my personal cell phone. Call me with your questions. I'll gladly answer them for you. Don't sit back and just think this is all there is, because there's a whole lot more to the picture. And I'm always glad to share it. It's like I told you, ladies, last night. If this is something that the group feels would be beneficial to do as an ongoing thing, maybe every 3 or 4 months, to keep up with the changes, because credit scoring is changing rapidly, regularly, and drastically in some cases, I'll be more than happy to come back at your leisure. It has been an extreme honor to be with such esteemed people as you. I am honored, and I'm here for you anytime. Any of your friends, any of your relatives, people you go to church with, people you work with, whatever, they need a credit checkup in today's world, because you can't know where you're going in life if you don't know where you are. And there's a lot of bogus information out there, a lot of outdated information. What I've given you tonight is real, it's relevant, and it's now. But 3 months from now, it may not be as relevant. So I'm here for you, and it's been my pleasure. So thank you very much.
Thank you. So one more question, a couple more,
Okay.
more questions are popping up. Okay, we're gonna give a couple of more minutes for questions. Let's see here. 2 questions relating to the 850 score. So one says 850 is the optimum score, right? Is that the optimum
850
score?
is the top of the scale, and in all of my years, there's never been anybody that has had it. The highest I've ever had on a FICO is 832, and it was an 87-year-old man.
Okay. And we have someone asking also, what's the lowest credit score that you've ever worked with?
No score, which means it was below the 300 minimum. I have a separate program that I teach to young people because they have no score, and it will show that they have no score. It'll say N/S, which means non-scorable, which means there's nothing there to build a score from. And so I teach them how to come out of the gate with the knowledge, the education, so that we can be proactive and we can hopefully keep them from making the mistakes that people like me and possibly you have made along the way, because we didn't have the knowledge about credit when we were growing up. I grew up in the 50s, where if you couldn't pay cash, you didn't need it. And, so credit didn't become prominent until the late 70s. And so with that, helping our young people avoid the mistakes, getting the good foundation. I typically can take an 18-year-old with no score, and within 6 months have them with scores over 720, and I've got the before and afters to prove it. So, no score is what I've seen, but it's not uncommon for me to get people that come to me from realtors and lenders that have 480s to 550s, and they want to buy a house.
Right. Okay, we have one more comment, and you addressed this earlier today. There's a comment. We have some educators on the line, and one educator just stated that they believe that this needs to be a part of our education curriculum. So to the educators that are out there, Mr. Broom has made several attempts to make this part of the curriculum. So if you can assist in that happening,
Call
please reach
me.
out to him because he's very interested in sharing this information right here in our community with our children that attend our local public schools.
I do. What had told you was I've done John Carroll in Fort Pierce a number of times. I have done the charter schools, but the public schools, I cannot get return phone calls, even with personal introductions that have been arranged. And I don't know why, because the program for our young people, a little more comprehensive, but also free. And it's not done on the premises, so there's no liability. And I can't understand why they wouldn't embrace it for our young people, because it's the one thing that's going to affect them for the rest of their life. And kids that are going to need student loans and things of that nature for financial assistance to go to school, credit score plays a big part of what that student loan interest rate and program is even going to offer.
Right. Right. That's correct. Well, at this time, I just wanted to address our participants and just thank you again for being with us. I'm going to turn this over to Tanya Lowe, but before I do, I just want to let everyone know that you will be receiving an evaluation through your email. You all registered. We have your email. Please take the time to fill out the evaluation and send it back. As I mentioned at the start of this webinar, we are striving every day to do our best for our community. So we want to hear from you. Thank you for your questions. Thank you for your positive feedback and comments so far. And at this time, I will turn it over to Tanya Lowe.
Thank you so much, Jean, for sharing with us this valuable information that we can all use to take control of our credit. Thank you so much for sharing with our community. And also thank you for availing yourself to continue to work with us as we move forward with our program, Discovering the Treasures of Homeownership, right here on the Treasure Coast. For our participants, thank you so much for joining us this evening. And please, if you will, take a moment to take a screenshot of our information. We invite you to join us for our next Smart Money Moves webinar, which is scheduled for Thursday, January 21st, 2021 at 7 p.m. And we will explore the topic of investing in yourself and business ownership. Once again, Jean has availed himself to us, so we sincerely look forward to hearing from him again so that we can learn some more in-depth information about how we can take control of our credit. Thank you and have a fantastic evening. Our website where you can follow us and learn additional information is treasurecoastlinks.org. Thank you and have a fantastic evening.
Thanks, everyone.